Hello, chart watchers, and welcome to this Thursday, September 6th Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we've got the Dow Jones Industrial Average just about flat. Been kind of a volatile morning, but so far not a whole lot of movement on the Dow. The S&P 500, however, has gone back down below yesterday's low, all the way down to the 20-day moving average, kind of the area where we broke out in August. Currently, the S&P down almost 13 points, 2876. The NASDAQ really taking it on the chin again for a second straight day. It is off of its earlier low. We'll see whether or not we can rebound this afternoon. Talk about that a little bit more, but currently NASDAQ down nearly 1%. Russell 2000 on a relative basis performing pretty well, down about 0.5%, and still well above its 20-day moving average. 10-year Treasury yield, big reversal. Talked about trying to get through this 290 area. We did it on the intraday basis yesterday, couldn't hold it. We gapped up above that level today, but so far reversing. Volatility has been on the rise for the past 5 or 6 days. Short term, that can be a problem if we start to break down, so we want to watch these key support levels. We'll talk about those in a bit. Energy is the laggard. Technology certainly not performing very well either, but you can see energy still hanging down near its low of the day, whereas we are seeing at least a somewhat of a rally in technology off the earlier low. And I just put on here 4 semiconductors. I looked at the NASDAQ 100 about 15 minutes ago, and these were the 4 worst performers, all semiconductors. KLA 10 core down $10 currently. Micron, you can see down $4. Lam Research down $9.75, and Applied Materials down $1.40. But all of these pretty substantial percentages, starting with KLA's almost 10% decline. Micron 8%, 6% on Lam, and 3% on Applied Materials. Many of these stocks, by the way, if you look at the charts outside of KLA 10 core, these are not looking particularly good. Now, maybe they will hold support. We'll have to watch, especially Micron, which has been a leader, to see whether or not it can hold on to that mid-August low. But I did see that the scooters on all of these stocks are in the low single digits, with KLAC being the exception. I think the scooter on that stock is about 20 or 21 right now. But this is simply another reason why we try to avoid these stocks with low scooter ranks, as they provide, unfortunately, a lot more risk. Anyhow, with that, Erin, I know things have been kind of hectic here over the past 2 days with technology under fire. We're not used to seeing that. But how's your Thursday going?
Oh, so far so good. I had a nice little slumber party with my girlfriend last night while my husband was on a fishing trip. So got in a lot of my girl time. So now I'm ready for the serious market right now. And yes, I'm really kind of surprised to see technology suffering to the degree it is. It was really off to a good start in comparison to the other markets. But yeah, and semiconductors, wow. I guess AMD is probably about the best one out there of all of them. I think it's...
There are still a few. Yeah, I was just going to say there are a few semiconductors that are hanging in there, along with software and computer hardware, even though those stocks have been hit pretty hard recently. Internet, for sure, it as well. But getting back to your earlier point, I think I'm going to take the fishing trip over the slumber party, just saying.
Yes, I figured. Yeah, he's caught some fish already, so I'm looking forward to some trout later on this weekend. So that should be nice.
Always nice to have fresh fish. Anyway,
yes.
But we do have a big guest in here. He's back. He's been with us several times before. We always have a great time when Bruce Fraser joins us. Welcome, Bruce.
Good morning, good afternoon. It's great to be here.
Or good evening, depending on where you are.
Yeah, wherever you are. And it's going to be a lot of fun. So I was just thinking about going fishing.
I've got all of you.
Maybe we'll go fishing in the market first.
There you go.
Yeah, that was a subliminal message, so I'm glad it got through to you there about the fishing.
Well, it's funny because I talk about looking at charts, and people ask me, well, what are you doing? And I said, I'm trolling. So I go through a lot of charts. I'm trolling. So
yeah, trolling.
A lot of fishing metaphors there.
Yeah, sometimes trolling is not a good thing.
Sometimes it's not.
We're going to go with the good kind today.
Yeah.
Okay.
Bottom fishing. I like that. There we go.
There you go. Hey, I like
that. See,
that.
There's all kinds of great metaphors.
Yeah, we were talking about fishing. I didn't come up with the bottom fishing. I'm kind of disappointed. I didn't think fast enough on it.
Well, you know me and the naval analogies. I still have it on the brain since ChartCon.
There you go. Well, we got a bunch going on today, so I'll let you take it away.
Yes, sentiment is going to be tomorrow. You won't want to miss that. Tom, you're doing a workshop on Tuesday, in case you didn't know. Brian Livingston will be joining us on Wednesday, and then Grayson Rose from the Mothership will be coming in on Thursday. I'm not sure what he'll be talking about, but it's always interesting to get his point of view. Today, we will start off, as we were saying, with Bruce Fraser after our technical news and headlines. I'm very, very curious what that hypodermics is going to be about, Bruce, I have to say. 10 and 10, our first symbol is going to be FTI Consulting, FCN. And finally, we'll finish off the program with drilling down. So let's go ahead and get started. I know there was a lot of economic news out today. Am I right?
You are right. There was a plethora. I've been waiting a long time to use that word. There was a plethora of economic news out this morning, starting with the August ADP employment report. Typically, we get that on Wednesdays, but because we had a holiday this week on Monday, it got pushed back a day. So the ADP employment report was out this morning. Non-farm payrolls comes out tomorrow morning, by the way. But the ADP employment report came in a little less than expected, 163,000 jobs, market looking for 182,000. So a little bit of a disappointment there. But initial jobless claims, 203,000, market expecting 213,000. That 203,000 reading today, along with the 4-week average of 209,500, it's close to a 50-year low. I believe those readings haven't been seen since 1969. So certainly pretty good news, and it could bode well for a report tomorrow. We'll have to wait to see. Quarter two productivity came in slightly below expectations, rising 2.9%, market looking for 3.0%. August PMI services, also a little bit of a disappointment this morning, 54.8, market looking for 55.2. July factory orders close to expectation, but slightly worse, came in with a decline of 0.8%, market expecting 0.7% decline. And then finally, August ISM non-manufacturing index, finally a little bit of good news, 58.5, market expecting 56.8. So we had a little bit of mixed economic news, but clearly when you take a look at what the bond market thinks of all this news, they didn't like it. So some movement into the treasuries, and of course that sends the yield lower when money is moving into treasuries. And this reversal is taking place at a pretty key area around 2.90%. So we'll see whether or not we can hold that 20-day moving average, which is down around 2.88. We're sitting almost right on it right now. If we do fail to hold it, I think it does open up that 2.81% level again. But the non-farm payrolls report tomorrow might have something to say about all of this. That is kind of like, for me, the non-farm payrolls to the market, it's very similar to an earnings report for a company. It's hard to predict what's going to happen, but it can have a material impact on the market. So we'll be watching to see how that report comes out tomorrow. I think the non-farm payrolls number is either 195,000 or 196,000 expected. So we'll see whether or not the actual number tops that or not. If it's weaker than expected, it's really hard to predict what the market's going to do. Sometimes when these reports come in less than expected, the market gets excited, the stock market gets excited, because that means the Fed might be a little bit slower to raise rates. But then on the flip side, having a better than expected report certainly shows strengthening economy, which with interest rates still relatively close to all-time lows, I don't think that interest rates rising would be a big problem. I think the real issue would be a jobs report that comes in way below expectations. I don't think that's going to happen, especially given the initial jobless claims numbers that we've been seeing. But hey, you never know for sure. All right, let's take a look at some of the things going on in the market today. And of course, got to start with the NASDAQ. NASDAQ has been under a lot of pressure the past 2 days. Unusual, because we were in all-time record high territory. And I think we just have to understand that we're going to see some profit taking from time to time. In the short term, I would be watching this rising 20-day moving average. Yesterday, we got close to it. We bounced. Today, we went beneath it, and we're trying to bounce. I did mention, and I'm going to go ahead and pull up on a separate tab here. I want to go into my blog article from this morning because I have a number of charts in there and I don't want to recreate them. But if we take a look at the 60-minute chart on the XLK, I put this in the current outlook section in my blog article this morning. But first of all, this is without today's action. So this is what I was looking at in the pre-market. And you can see that since the end of July and throughout August into early September, yesterday's recovery was kind of in the nick of time here because we were right on this trend line. So we had this intraday move below trend line support, below the price support, below gap support, and yet we rallied back into the close. So today there was an opportunity for the bulls, I think, to really pick up some steam back to the upside. But that is not what happened. Instead, you can see as we update this chart that the action today has been very bearish. We did break the trend line. So far, I know it's intraday, but so far we're losing gap support and price support. And so in the short term, I view this to be very bearish. Now, again, let's see how it finishes. If we finish with a big rally this afternoon, I think that could bode well heading into the non-farm payrolls report. I'm always interested to see how the market closes. But you can see back in July, we had a similar, maybe not quite as lengthy, but we had a similar uptrend in play. And when that broke, you can see how the sellers really began to take control of the action, at least in the very near term. And so we could be in for that currently. Although, again, that non-farm payrolls report is a huge variable that we just won't know until we see it tomorrow morning. But I do think the downside risks increase if we finish weak on the XLK today. Other charts in here, and I wanted to go over a couple of these other charts in the report because I really focused on technology today. Let's take a look at the internet group. I thought yesterday's breakdown was very bearish for the group. You can see quite an uptrend in play where internet stocks from early April down at 1475 went all the way up to 1950. That's a huge move in just about 3.5, 4 months. And normally what you see is as we were making this push, you see the higher highs, higher lows. There was maybe a little bit of a neckline there, but we ended up moving to another high, so that negated that one. But after making this push up, you notice we fell all the way back, and we did it on very heavy volume here. And I think that is important to note. So we did hold on to the neckline support coming across. We bounced off of it, but clearly a left shoulder and a right shoulder with equal lows producing or printing that neckline. We came down one more time, tested that neckline support, bounced, and now look at what happened yesterday. We got that breakdown. Notice the volume picked up. This is really bearish for internet stocks in the near term. Now, sometimes you get head fakes, and we'll see whether or not we have one. But so far, it is not looking like a head fake. It is looking like well, we'll see what the volume comes in later today. But this is a continuation of yesterday's breakdown. I think this is bearish for internet stocks, and we'll just have to wait to see. Now, if we come back up, get through the neckline, the 20-day moving average, I think, becomes extremely important on internet stocks. I think this is a group to avoid. I mentioned yesterday and also in my blog this morning that I did own Google coming into this mess, but I got stopped out on Google when it took out yesterday's low. So I have no exposure at this point to the internet group, and this is a group I'd be real careful with right now. You could get a reversal, but when I see a major breakdown in a head and shoulder pattern, I have got to see that reversal. I'm not going to expect it to happen. In fact, I'm going to expect the opposite, which is a lot more weakness. Let's take a look at going back. Let's take a look at the next chart that I had, which was the software stocks. Here you can see software breaking down below price support. Broken price resistance becomes support. We lost it yesterday. Look at the volume pickup. And also lost here was the 20-day moving average. And that occurred with a negative divergence in play. Higher prices, lower PPO. So what's going on with software today? Well, software is still holding below the 20-day moving average and below that breakdown level. We went up, we tested it earlier, a little bit of back and forth. This group isn't doing it as badly as the internet stocks or the semiconductors, but it is still struggling, and we do have to watch it closely. Semiconductors I wrote about in the sector industry watch because I thought if internet stocks fell back, maybe semiconductors would get the money rotating into this group, and perhaps we could get a breakout above the 3560, 3565 level. Instead, what's happened? We have seen a big drop. Now, if we can get back up above that 20-day moving average, leave a long tail below, I still give the group some hope. But if we finish weak this afternoon, I would actually be looking perhaps for another pushback down to 33.50. And semiconductors and internet stocks and software, if those three continue to be weak in the near term, I do think that some of the September historical weakness that we've seen in the past could be reignited here in 2018. We'll have to watch and see. Anyway, Erin, I know there are some upgrades and downgrades. So what are you seeing on those?
All right, let's take a look. It was very interesting because I think about 3 out of the 6 that I'm going to look at, I had to move to a weekly chart because I couldn't find support in the last year on them. So very interesting charts to look at. So I'm going to go ahead and we'll start with the upgrades first. TCF Financial was upgraded by B of A today from a neutral to a buy. This was probably one of the few charts I liked of all of the ones that we're looking at. This one I was able to pick out an ascending triangle, and you can see we've just gotten that break to the upside. Expect a move about the size of the back end of this ascending triangle. So I would say it's going to make new highs at this point. Financials I think might be a good place to be looking. They've really been depressed for so long, and this just might be the time for them to make a move. But this is a great breakout on TCF Financials. So on that upgrade, I do like that setup. And, honestly, I think there's still a lot of upside potential there. Vodafone, and I think we looked at this one recently, was also upgraded today by Citigroup. It went from a neutral to a buy. And notice this is one I have a weekly chart on, and I'm going to just flip it back over to the daily, and then we can come back and look at that weekly chart. But you can see it's just been moving down, down, down. No support anywhere to recognize. So and this one was upgraded. So this should be rather interesting, I suppose. Let's see. Let's go back to my proper chart here. All right. The weekly one, which is the one we were looking at. There we go. All right. So what I did pick out was an earlier head and shoulders pattern. And look at how textbook this is. Comes right off of that huge rally, broke the neckline. When you look at the length of the pattern and add that to the bottom, we've pretty much hit that. It came right about at this support level. And today, yesterday, or last week, I should say, this is a weekly chart. Last week, we did drop below it and close below that important support. So that honestly would have been a great warning that we might be looking for some more downside. I'm really surprised this one's been upgraded. I just don't see a whole lot here. Maybe we'll get a turnaround on the momentum. But at this point, all it's been doing is falling and falling, falling. So, maybe they're trying to gin up some interest, but at this point, I'm not liking this one even on the upgrade. Let's go ahead and take a look at some of these the downgrades. Franklin Resources, notice again a weekly chart. You can see how ugly that daily chart is right here. Again, no area of support, and you can see this is very important support that was broken below. So not a surprise to see a downgrade on this particular stock. And I don't know if this is a bottom fishing opportunity because there is this area of, more intermediate term. Well, it's still long term. We're looking at a weekly chart, but this is the only area I could see of support. And I think it's just really intermediate terms, intermediate support in between this area, which I would say is the biggest area of support. Look at the PMO. It's just been heading downward. It's now turned down below its signal line. I don't see this as a good bottom feeding opportunity. Maybe if it got down here to test some of these lows, we could see the bounce off of this area of support. Certainly could. So maybe you want to keep it on a watch list, but I think there are certainly better opportunities out there. Somebody requested Chevron, and it turns out it was downgraded today by B of A from a buy to a neutral, so not horrible. I think it's very interesting right now because we are sitting on this area of, I would say, very important support. Notice that it just really comes in on a lot of areas that were previous resistance and previous support. but we're falling below that. You can see in the thumbnail, we're in the process right now of closing below that previous close we had earlier. So while I'm not liking this one, it did get the upgrade. They're on neutral, so I don't think that, or the downgrade. I don't think that, it's a horrible downgrade, but I'd watch this one. I think it's worth a watch on the watch list. All right, Rite Aid. This one was also downgraded by Goldman Sachs, and they reinstated a sell. Again, moved it to the weekly chart because there was no support levels. We've dropped below the most recent support from 2017. I would not be looking for support again until it starts to reach below $1. I suppose you could go for a short on this one, but I don't like them when they're that low priced. This one's actually, it's rather new. This is Tilray. Northland Capital downgraded from an outperform to a market perform. I'd be very careful with this one. It isn't a parabolic. Typically, when they break down, they move down to the last area of consolidation or basing. So I don't like this one. It's downgraded. It's clearly overbought. I would be avoiding this.
Yeah, I think TLRY, that's one of the cannabis stocks, and those stocks have just been literally on fire. No pun intended.
Right. Some of them, like Canopy Growth, have been on fire too.
Apparently, I think Northland Capital is trying to weed out its portfolio, maybe.
Mm-hmm. Well, yeah, clearly.
Stock might be too high.
Yes, it's definitely too high right now.
Or maybe they think the grass is greener elsewhere.
Oh, well, there you go. That could be one as well. Maybe they're going to smoke out some better opportunities. We'll have to see.
There you go. Or maybe they're just trying to stir the pot.
I know I could never beat you on this sort of thing, so I'm giving up right now. And I think we should bring Bruce Fraser in on that note. You don't have to start with a joke, Bruce, like everybody does on their presentations. You can go straight on in because we.
Oh my gosh! It's like, how do I compete?
Comedy hour's over, Bruce. You're in.
Oh wow! So okay, well, I'm going to just start. So much to do, so little time. So I'm just going to go as fast as I can. I'd like to have everybody look at the June 30th blog that I wrote, mid-year look at the FANG stocks. And what I did was a little case study on an ETF that owns the Internet Index stocks. All the FANGs are in here. And there's a lot of advance warning of a change of character in the way that these stocks are trading. And it came right at the end of the quarter, which shows that the institutions were starting to change their view on these stocks and were starting to lighten their positions. That doesn't mean they were getting out. They were just lightening their positions. You can see that this comes with a buying climax and a throw over of this trend channel. Very important throw over in an overbought condition, which produces a change of character. This is a 2-hour chart. So just keep that in mind. And really what I want to encourage you to do is to go back and look at this. And here you can see the throw over, and then we were calling for a change of character into a trading range. And that's exactly what we've gotten since. Looking for a secondary test, we got that here with a throw over, an up thrust, and so on. So just some homework for you. And so having done that, let's move over into the main job to be done today. I have a mishmash of stuff, so this is going to be a total hodgepodge. But I want to talk about a little promotion that we have going for our Wyckoff market discussion. And this is really an educational workshop that we do every Wednesday, Roman Bogomazov and I, on looking at the markets from the Wyckofian perspective. And we have students submit charts if they choose to. It's a great couple of hours that we spend together. And we're doing a special promotion, 3 weeks for $30, so that you can get a real feel for what we do. And just go to Wyckoff marketanalytics.com to learn more about that. And most importantly is our new TV show on Stock Charts TV, which is power charting. And it's 30 minutes of intense Wyckofian fun. So anyway, please join us for power charting. And they re-show it over and over. It's originally going to be on at Friday at 3 o'clock Eastern, and then with replays. So this is actually a chart from our Wyckoff market discussion. And I'm going to concentrate specifically on a couple of charts here, but I want to give you the big picture because there's some important things happening here. We were calling for a rally when we got into the support areas of the market earlier in the year. And we said, and we had point and figure counts that counted up to the top of the range, to the resistance area. And we've had really good fulfillment of these point and figure counts up to the resistance area. You can see something that's going on almost across the board, which is throw over and overbought condition at the buying climax in January, and then above the resistance area and at the top of the trend channel. So there's a lot going on here, and point and figure counts are being fulfilled. Now, this is not potentially a big negative for the market, but it does argue that we're going to most likely get some kind of a rest in here. So I'm going to focus on the NASDAQ here in a minute, but you can see the NASDAQ has got the best upward stride. And so we were able to draw a supply line from the buying climax through this upthrust action. And you can see how well it followed that. And then we've just gotten this little run up with a climactic thrust. You can see the acceleration throw over. And now we're back into this area for another down day, even after yesterday. And we can see that the Russell has actually become, after being leadership for much of the year, has really become kind of a little bit of a laggard, can't get to the top of the channel. And I don't think that's a big negative for the Russell, but it could be a warning about the market as a whole needing a rest. So, and then the Dow is the weakest of the bunch. And we've been of the mind that the Dow needed to get in gear and start to move up and become leadership. And it's kind of done that. It's starting to act better. So we think that the Dow has the potential to get up to the resistance area and maybe a lot higher. This doesn't even address the idea that there's huge accumulation structures potentially here for much bigger moves. And so that's a discussion for another day. And we do talk about that in Wyckoff market discussion. So, but we will be covering that in the weeks to come. So here's the S&P. You can see this beautiful trend channel. It's hugged the top of the channel here really since the end of the second quarter, and just threw over the top. Climactic action on a small scale, but sort of an acceleration. We always look for accelerations to pause the advance, at least temporarily. It's exactly what's happened, and we're at this crucial place where old resistance becomes new support at this prior buying climax. And so we can see here that we're kind of in an important place. If we come back in, I believe the risk could be down to the bottom of this channel, maybe to this central support area. It doesn't have to come down that far, but it's possible. So we're going to have to be tape readers. The NASDAQ is where I'm going to concentrate a little bit of my attention before I go on to hypodermics. But and I'm going to talk a little bit about gold. And so here you can see NASDAQ has really been the dominant index on the way up. Again, just like the S&P, it's had a throwover climax of a rising supply line, and now it's back into this area, and it's getting very close to the bottom of this steep channel. And so that's going to be interesting whether that can hold or not. And we will zoom in and look a little closer at that. These, you know, I know that you all know that I'm a big fan of intraday point figure, so I tend to do a lot of that. And here we have the S&P. Look how well these are working. This is a little accumulation. This is 15-minute data, ATR scaling, and it gives us a box size of 3.56. As a matter of fact, we are going to do a point and figure workshop in October, Roman and I. So we haven't announced it yet, so don't tell anybody. And but we're going to be doing one, so that should be a really fun and useful 3 sessions. So here we can see this beautiful accumulation, and it went up, got very close to the minimum objective, and then it pulled back and has came back in, but did not go below the low of this accumulation area. So this count actually remains valid as long as you don't completely overlap. And it built another count, and it did in fact touch the minimum count here, paused, and this completed this accumulation. And so this accumulation, it touched it perfectly up here, and the market hit the wall on this, touching this minimum objective for the S&P. And now you can see we have distribution. Now remember, this is just 15-minute data, so these are just little intra-week and swing trade counts, and this takes us down to 28.51, 28.33, and here we have the industrials. Well, interesting difference with the industrials is that we have a distribution here. We got close to fulfilling it, but we didn't quite get there, which I think is bullish when you don't get to the distribution area. But caveat, this might be just more distribution. This might be a redistribution, and I'm interpreting it incorrectly here. But so far, it looks to me like it has the nature of accumulation. Sign of strength, jumped out of a consolidation area, backed up, probably could take this whole count, but this is the potential that it gives us. So I'm going with the notion that the industrials continue to be the strength. Now, here's the important one, and this is the NASDAQ composite. And so you can see there's a big distribution here. This is 5-minute data, so it looks worse than it is because this is a very short period of time, goes back into late August. But let's look at this with a chart of the NASDAQ. This is classic distribution. This is a 30-minute chart, and we always generally have shorter, smaller data sets for the point and figure than we do for the intraday chart. So 30-minute here, 5-minute here, they match up nicely. So just keep that in mind. So here, uptrend channel, it's classic. Throw over, overbought condition, buying climax, automatic reaction, and then distribution, a period of distribution forms. The key for us is we look for a sign of weakness followed by a last point of supply where there's a rally of poor quality, and this is the last point at which supply is met before the downtrend begins. That's really kind of what it means. And we take a count from the last point of supply across, and we can see here that we've broken down and out, overbought, then broken down and out of the upward channel, and now we're in a downtrend. And this doesn't include today's action. Well, what's the count? The count goes down to 79.05, 78.70, and at as of this morning, we're kind of in this area right here. So we're getting very close to fulfilling this count. So really nice job on this intraday data in terms of giving us a good count. And I believe that once these counts are fulfilled, that the NASDAQ composite could stabilize, and then we'll see whether or not it's redistributing for another move down. This also puts it in that longer term chart we looked at into the bottom of its trend channel. So it could find good support there. Okay, now changing directions, I just want to go back to a blog that I wrote very recently, and this is on gold. And this is a big messy chart. It's really designed for you to study, and this chart is in the blog. This is monthly bars, and it goes back into this accumulation, or I'm interpreting it as an accumulation, goes back into 2013, selling climax, and then a potential accumulation structure. So the reason I published this chart when I did was because the selling climax was touched right here, just under 1200, and then a period of sideways trading. We had a selling climax, automatic rally, trading range. So very traditional Wyckoff analysis, but on a monthly chart. So you can see this works on very large time frames. So we drew a downtrend channel. This is the supply line, oversold channel, and look what happened. We had a sign of strength and an LPS. This tells us that we're getting close to potentially completing accumulation. So we can have more than one LPS. So we had another really, kind of a modest rally, but took a long period of time to get up. It rallied right to the supply line, and then it came down again. 5 months down without an up month. And this is classically what LPSs look like. They just persistently go down. But notice what happened. It went down, the volume went down as the LPS approached support. Well, if this area can hold, and that's a big if, this will be a second higher low. So we have a low at the shakeout, we have an LPS low, a higher LPS low, and what we would be looking for is to get a rally of sorts that can take us towards the resistance line. And this would help us to understand that accumulation is accumulation, and it could be nearly complete. We could spend a few months down here bouncing around in the support area. So we need to be very, very patient with gold. This is a daily chart of that last LPS decline. I'm not going to spend much time here. I have more to do, other things to do. But here's a supply line. Look at how beautiful this is. Classic distribution. And this is on the daily chart, setting up and signaling that a downtrend is coming. It goes down, it accelerates down and out of the trend channel, and this is a climactic surge. It says selling climax here, but this is also potentially the LPS low, and this is where the support line is on the monthly chart. So there's all kinds of stuff going on here, and we have had a rally up back in to the range, and now we're coming back and we're attempting to test where it's still at a higher low here. So this is interesting. This is a very interesting combination of, looking at the monthly, looking at the daily, and then having the theory that this could be an LPS, which would produce a rally of better quality. You can see here this rally is already better than anything that's come before it until, say, here in the middle of the distribution area. So this is a rally of improving quality, change of character. So study that chart if you have time. And here's the point and figure. So the point and figure of the main body of distribution gives us a perfect count down to the low, which is the support area. And then also there's a slightly bigger count we can take, and this count takes us down. If this count may yet be fulfilled, but so far we've missed it by 2 boxes. So that's pretty close to a hit right there. Okay, and then here's distribution schematics. You can go look at these to compare them to the distributions that we just looked at with both the comp and gold. And that is in the September 24th, 2015 blog. Okay, so here is, let's see, how are we doing for time? We have about 6 minutes. Okay, this is going to be a really fast discussion of hypodermics. And hypodermics are these long uptrending periods where a market, an index, a stock goes up and up and up, and then the rate at which it goes up accelerates dramatically. And so you can see here that I'm looking at a GBTC, which is the Bitcoin Investment Trust, as a proxy for Bitcoin. And we are going to analyze this as a hypodermic, and then we're going to look at some historical examples. Here's China large cap as a recent 10 years ago historical example, and look at how well they match up. This was a Tom McClellan moment for me, because I'm looking at this Bitcoin chart and I'm going, this chart looks familiar to me. I've seen this chart before. And this was a chart of China large cap that we had studied in the classroom with our students. We had a number of students from that part of the world who were studying from a Wyckofffian perspective the stocks that make up these indexes. And they were very concerned about the fact that there was a hypodermic type advance that was forming. So what do we look for in a hypodermic? I mean, they did great work on this. And so we looked at this week after week, is that there's an advance. Here you can see with Bitcoin, it came out of the area of the upward stride, but then came right back in, and look what it did. It accelerated the rate at which it went up. So we could draw an upward channel here where we can see the upward rate of advance accelerating from the main stride of the advance. So the main stride continues to be important, but notice this. We have a throw over not only of the main stride, but also of the advancing, the accelerating stride, to give us an overbought condition. And this produces, it's like a fever in the market, a hypodermic. And so as it went up and out, this is an exhaustion kind of climactic action. And so you can see here with the China large cap, it did the very same thing. Now what I've done is I plotted them back to the point at which they broke their rising stride in both cases and stopped there. And the point I want to make here is that this was a request. Somebody had asked that we talk about Bitcoin. I don't follow Bitcoin closely. I have, members of the Wyckoff tribe that follow it and want to talk about it, so we do that. And so this, I think that the interest, all of a sudden, there's been more interest in Bitcoin lately, and I believe it's because there's this idea that Bitcoin is making a base here. And so let's see what can happen, because the main concern is that we consider the risks that could be exist at a point in time. So how much risk is there out there right now? And so we can see here, this is the same chart. I just blew it up a little more, it's a little easier to see. We can see the stride, accelerating stride, and then the overbought condition and the throwover. Well, look at how this Wyckofffian concept, this tool, gave us a warning about the risks being very high, just as we had talked about with the comp, NASDAQ comp. It showed us that the risks were very high. FDN, trend analysis, showed us the risks were high on the throwover. So here we are, it's gone through the major stride and now is slightly below it. So I would say this, Bitcoin needs to get in gear and get back up into its stride, and it needs to do it in short order. It should not break down below these key lows under this lower trend channel. What can happen? So for people that are in Bitcoin, this is, you need to think about the tape action, and what is it that you need to see to maintain your bullish posture if you're long Bitcoin. And so let's compare GBTC and FXI as our historical model from 10 years ago, and let's see what happens. So, okay, so let's, okay, so, well, we don't know where Bitcoin goes from here. This is what happened to the China large cap. This is where we concluded our analysis, because this is approximately the place where GBTC is at this place right here below the channel, and you can see what happened to China large cap after that, after it broke down these key prior lows. So you can see that liquidation came in, and the liquidation just engulfed the trend of the market, and it just had a huge climactic decline thereafter. And so this is what happened with FXI, and I want to show this schematic because this is a schematic of the hypodermic top. So you can see breaks the stride, attempts to rally. It has a huge, very wide distributional structure. And here you can see it with FXI. Last point of supply, preliminary supply, huge, huge, huge vertical structure in this top. And then it just cascaded downward. So this is the reason that we really need to see Bitcoin stop here and rally back up. Otherwise, the risks, I think, are measurably high. This is the Dow Industrials 1920 to 1930. And so the same type of analysis, it's below its upward stride. You can see the accelerating stride. This is about 9 years of data. This was about four to 5 years. And here we are just at the lower channel and just sort of bouncing around there. And then here's what happened when it broke down. So this was, and there's a specific reason why hypodermics happened. I don't have time to talk about that today, but I would like you to just consider going back and looking at these. This is gold. Gold's another hypodermic that we can study. You can see that it's in its stride. Gold broke the bottom end of the stride, and then it just started to just persistently drop after that. So these are just examples of different hypodermics in history that we could maybe use to inform our Bitcoin analysis. So Bitcoin needs to hold around these lows, get back up into its upward stride, and this is a daily chart of Bitcoin right here, or GBTC as a proxy. This is the actual Bitcoin index in stockcharts.com. So you can see that the correlation is quite high. So for analysis purposes. Okay, and it's a couple of schematics of hypodermics that you could screen capture if you like. And then I want to show you a chart of Sprouts Farmers Market. I'm not going to spend any time on it because I am out of time. But this is a stock that I think is very interesting. It's come down. It's a relatively young company, selling climax, automatic rally, and then an up thrust. We can see how well it's done building a potential accumulation structure. We look for a sign of strength, and then a last point of support comes to a higher low. We can take a point figure count of this. So we're in the area of $27. We have a point figure count here. This count goes to approximately $87. So
okay,
anyway,
since you're on that, excuse me, Bruce, since you're on that point and figure chart, somebody did have a question about what you mean by overlapping PNF counts negating a count.
Oh, okay. I think that refers to this. Let's hear right here. I was talking about how this was a very deep pullback. So it came way back into the area of the count, this prior count. It did not go below the low of this count. As long as it does not, this count is still active and valid. So see, it made a higher low here. I think what I was referring to is that if it does go below the low of this count area, which is down here, like 2 boxes lower, if it was to go below that, then this count would be negated. Well, it came within 2 boxes of touching the minimum. So that was a pretty good count. This count made a nice trading rally here, but we could still consider this count as being active because this did not go to a new low. That was my point. And it's kind of it's kind of just a rule. It's sort of an essential rule to point and figure that really helps us to sort of know when account should be considered to be still active and when we want to just throw it out.
Excellent.
Yeah. So anyway, so there we got through the important stuff. So Sprouts Market, that's a really interesting chart. I encourage everybody to make a chart of that and mark it up and do the point and figure.
Excellent.
Hey, Bruce, I got a question. You know, when we first started, of course, we started with all those jokes about TLRY, which is a cannabis stock. Would you be looking at that group because of the almost parabolic? And I'm assuming hypodermics, when you talk about it, very similar to the parabolic structure on a chart.
Well, here's the thing, and there's a whole discussion we can have about why hypodermics happen. And it's a mind-blowing discussion. It's really interesting stuff. And I learned this from talking to my students back 10 years ago, and also studying the 1920s in the Dow Industrials. There's very similar conditions that existed between China large cap and the industrials back in the 20s. There's a psychological condition that was common to both. So anyway, the thing about the canopy and the marijuana stocks is that's unique to them and is similar to Bitcoin is that they are all new markets. They're new markets, new industries. We don't know exactly how they're going to be received, embraced. There's a lot of excitement and expectation about how much growth there could be for, say, Bitcoin, how much growth there could be for the marijuana stocks. And it gets the imagination of the speculator going. And there's no limit to how high these stocks can go up because of this sort of fanciful thinking about how much growth there could be. And they can go up for a long time. The thing to do is to do this trend analysis on the marijuana stocks the way that it was done here on Bitcoin, because there could be an uptrend for a long time.
Mm-hmm.
I don't study them. I'm not that close to them, but I can see that there's a commonality, sort of a psychological commonality that's at work with these themes.
Excellent. Well, as always, certainly a pleasure to have you on here again, Bruce, introducing us to the hypodermics. That was something different. We have not had that on Market Watchers Live, so appreciate it.
Very old concept. It's been around forever.
Well, I'm surprised I don't know it since I'm very old.
Well, it actually precedes our. It's that old. So
wow, we are talking old. Okay, well, I do appreciate you. I do appreciate coming on, Bruce. Always a pleasure to have you, and we look forward to having you on again soon, my friend.
Wonderful. Take care, everybody. Thank you all.
Thank you. All right, 10 and 10.
10 and 10. Let me go ahead and grab that and let you all see what I have right now. Let's see here. I did put an RRG together. We had a request to make it the weekly version, so I went ahead and did that. And here we go. I'm going to lower these tails just so we can see a little bit better. What we look for are the ones that are moving in that northeast direction. That is what Julius tells us to look for. So I will pick some based on that, but I'll also be picking some so that we get different sectors. My goodness, Tom, look at all the technology requests. Huge, like a half of it, almost half of them. So we'll definitely be looking at a lot of technology stocks as well. And if we have looked at it in the last week or last 5 shows, I won't be picking it, just to be fair. But the most popular in the chat room will be the second one. So even if we looked at it yesterday, if it's the most popular, that will be the next 10 and 10 stock. And right now we are, let's see, it's between USO and Alphabet. So get your votes in and let's get started. FCN.
All right, FCN, big gap up, but you can see extremely heavy volume toward the end of July with this push to the upside. So I think you got a lot of buyers coming in here. It did tend to struggle a little bit as it got up over 80, but you can see the volume started waning. So I think the stock just got a little bit ahead of itself. Has pulled back though. Notice the gap, the top of gap support has been holding. Then you've got the 50-day moving average. And I'm going to go ahead and just add one more annotation here. And I think I like to look at the intraday lows after that big news comes out because that's as far as the selling could get before buyers return. So I would be looking somewhere between about 73 and 74 and a half as very key support. We've already bounced off of this zone once, and you can see the 50-day moving average also coming in almost at $73 right now. So I think FCN looks good. I like the fact that it had this massive gap up on very strong volume. It's in a nice uptrend. I think the closer you get it to 74, the better I like it.
Okay. And the most popular in the chat room is indeed Alphabet, Google.
All right, quick reminder on why I got stopped out today. Appreciate it. Thank you. Yeah, but you gotta set your stops. I mean, it could recover, and end of the day, we'll see whether or not technology rebounds. If I was in it, I would be hoping that it recovers back up near that 1200 level. Here, there are a couple levels. Here was the breakout, and actually, maybe just grab this and bring it down just a little bit because there was the breakout, and you can see we gapped down there, and we have not traded. Well, we haven't closed back below that 1180 area. So the first level I was watching was this gap support. And then also you can see this tail down here. So I kind of got into this area, and this is my Monday setup, by the way, too, or Tuesday setup, which is not going to look very good come Monday unless we get a big reversal. But I honestly, I owned it and I got out of it. I didn't like the fact that we went below yesterday's low, so I ended up taking a loss on it and just kind of sitting this one out and watching to see. And the big reason I like Google, I think Google's going to bounce back and eventually be, great. But the overall group, internets, as I talked about earlier in the show, is they've broken down out of a head and shoulder top. I do think a lot of the reason is Facebook and Twitter, especially Facebook. But if the entire group goes down, a lot of times it's a case of the baby being thrown out with the bathwater. And I don't want to take any chances. So that's why I set my stop. It triggered it. I'm out. And if I was still in this one, I would really be looking for a reversal today, or I'd be careful because this is the fifth straight day now of losses on Google. And again, with the internet's breaking down as a group, I would not want to just be, trying to be a hero and catch a bottom here.
All righty. The next one I have for you is ZBH, that is Healthcare Medical Equipment, Zimmer Biomet Holdings.
Yeah, I like the space. I actually like this stock, but I'm going to go back a little bit more than 6 months and see if we can find a good level of support. First of all, notice with the gap up here, with the 6-month chart, I didn't even see this resistance over here, but sometimes it's helpful to go back a little bit further. And clearly, we now need to try to get through. And I'm going to actually use the candle body, which was this candle body back in early February, right here where it closed at about 127 or so. Notice the tail. It looked like it was breaking out on an intraday basis and potentially on a closing basis, and then failed. And this is why you got to respect these reversing candles like this, where you get a breakout intraday and you can't hold it, because now here the stock is 6 weeks later and it's trading $4 or $5 less than where it was back at that earlier high. So it's using up capital where you could maybe be in some other areas. I like the stock, but looking at it, I want to see it hold just about where it is right now. There is a key area of support just at about 120 and a half. You can see we've had 2 tests of this level now going forward. If we fail to hold it, if we go back down one more time, I would be afraid we're going to fill this gap back to 117. So a lot of different levels to watch here, but for now, I would probably use a trading range between about 120 and a half and about 127.
Okay. Let's see the next one. Since it was the second most requested, let's go ahead and look at oil, USO. I've been very bullish on it. Sadly, I don't like this pullback, but it was a good run.
It's still got bullish characteristics. I would just maybe be a little careful. It's in a range. That's the problem. So it could fall back to the recent low around 13 and a half and still be okay. Uptrends, I always say, and they are just a series of new highs, new lows. And so you got this move up here. Here's the reaction low. Goes sideways for a while. We break out, establish a new high up here, come back down. There's your reaction low. We broke out to a new high, but this low down here still, and I actually drew it up at the other low, but really that's the one that's really important in my view going forward. I want to make sure we hold on to about 13. As long as we can meander above 13 and below, say, 1530, then I think we're just consolidating off of an uptrend. So that still leaves you some downside. And if I was looking at this from a, do I buy or sell at this point in time? I think it's 50-50. We're in the middle of this trading range. So I'm not a fan. I'd avoid it, but I don't think it's a broken fund. Not at this point.
All right. This one's been on a run. It's in the industrial defense area. AOBC, American Outdoor Brands Corp.
Wow, huge move up. I'm assuming that was earnings related, but I don't know that for sure. Prior to that, you can see the volume was much less, but there was a lot of interest in this stock. I guess the first, if you're looking for a throwback, because I don't like to chase. So if I'm looking for something, maybe I could find a reversing candle on a pullback. I'd maybe look at that high that came back in June. You can see off that higher high, lower PPO, negative divergence. We went back down, but the bottom held where we had what appears to me now to be an exhaustive gap off the downtrend. Heavy volume gap down, and that we haven't even gone back down to test that low. And now here we are making another breakout. So it looks like we're beginning an uptrend where we've got a high, a higher low, and now a higher high. First area of support is going to be where we broke out from, which is about that 1325, 1330 area. The next major area of support is going to be where we gapped up on this heavy volume. So just below 12. Those are the two levels that I would try to wait for on a pullback.
All right. Let's see. The next one is going to be FOXA, FOXA, 20th Century.
Yeah, this one's been drifting lower for a while. Look at the PPO just sitting on the flat line. I mean, it just doesn't really know what to do here. So I think I would be continuing to watch gap support, which is that's where we had gapped up from. And so far we've been holding. And then we had another major gap there. So I think the area between about 43.5 and say 44.5 needs to hold. So far it's just consolidating. Again, not a whole lot of direction at this point. I wouldn't be interested until it started to show strength or until it fell into this support area.
All right. Biotech for you, Insight, INCY.
Yeah, this was right there with the four semiconductors that I mentioned at the beginning of the show as far as the worst performers on the NASDAQ 100. I think Insight along with Regeneron Pharmaceuticals, REGN, were right there. And you can see the stock down 3.5% today. It's struggling right where I would expect it to struggle. I mean, it started to strengthen, but we are in this sideways consolidation after a downtrend. And I think that's a little dangerous because normally these consolidation patterns they normally break in the direction of the prior trend, which is down. However, maybe this is the exhaustive selling that took place down to 61. We don't really confirm that, however, until we take out this reaction high. So I think this is just a trading range right now. I wouldn't do anything with Insight other than trade the range, which means I'd be a seller at 75 and I'd be a buyer if I got closer to 61.
All right. Let's see. How about Apple? We haven't looked at that in a week.
All right. Let's see. Apple, computer hardware getting hit earlier. Apple's been a great performer. So you got to give it room for some profit taking. Most recent high, we did have a higher PPO. So anytime I see that, I tend to look for a 20 period test, or in this case, a 20-day test. There's your higher PPO with the higher price, so no negative divergence. And when you get selling and profit taking, what I typically would look for is a test of the 20-day moving average, which we have not gotten just yet. The last time we had the PPO up this high, you can see here we had a lower PPO reading, higher price, negative divergence. That took us to the 50-day. We didn't hold the 20. But currently, I still see great volume trends. I think that there's a lot of momentum to the upside here with Apple. I'd be a buyer if it got down to the 218 level.
All right. You talked about it earlier in the show. What do you think of Micron? I don't like it. It's got a little bit more to go down, I think. I've definitely gotten out of that.
Yeah, I think it depends where we close today. Semiconductors failed to break out, which I talked about earlier in the show. I think it's pretty clear looking at this chart. We have a couple of very significant lows that have taken place right at about 45 and a half. Today we went as low as 44.06. So we had an intraday breakdown, very heavy volume. If we close back down near the low of the day, I completely agree. I think the stock goes lower, and we would be looking maybe at the next major level, which would be all the way back down around 39. I don't want to hold it that far. If it comes back up, though, and leaves this tail below the prior support areas, then I actually think that it could recover. And especially if we get a strong jobs report tomorrow and all of a sudden all is forgiven, money could pour back into Micron. But Micron was one of those 4 semiconductors that really is hurting the NASDAQ 100 right now. So a reversal would be good news for the NASDAQ, but the opposite would not be good news.
All right. Possible island reversal on this one. It's the India ETF, PIN. But that double top is sure pretty ugly.
Yeah, the double top is ugly, but again, a series of uptrends. We're testing price support. This is I could get behind a reward to risk trade on the long side just because we're in an uptrend and we are testing some key support right down here. And really right at about that 25 and a half level. Maybe put in another support level at that low back there. If you went below 25 and a quarter, I probably wouldn't take a chance here. But otherwise, I would expect to see perhaps another push back up toward the upper end of the range. So this is a key support area too, based on this double top breakout that we saw. So it's kind of a technical analysis 101 where broken price resistance becomes price support. So this is an area I'd really look for to hold. If it doesn't, I'd get out. If it does, and you're in it, then I'd be looking for maybe a return back up to that 2675 area. And I think that was number 10.
It is number 10. Okay, so there we go. There are the symbols that we did just cover in the 10 and 10. I will have those up as soon as, well, not as soon as Tom gets them to me, because he usually gets them to me before the end of the show. But I will have those up in the Market Watchers live chart list. So you can go and steal those charts, put them in your own chart list. Just go to the blogs page to the Market Watchers live blog, and you will see the link at the very top. All right, time for our final market update. Let's see what the markets have been doing while we have been so busy. All right. Okay, well, you can see markets are starting to make new intraday lows, at least as far as the S&P 500 and NASDAQ are concerned. Dow is on its way back down after trying to get back into positive territory. Not quite at intraday lows, but given the look of all the other indexes, I suspect it will make another intraday low. S&P 100 lower on the day. Mid caps also falling without much respite here. And Russell 2000 small caps heading straight down, getting ready to test that intraday low from yesterday. TSX, Canadian markets still on their way down. They did open higher, but definitely drifting lower, still making new intraday lows. Treasury yields are down on the day, now reading at 2.877. UUP mostly unchanged, follows up with gold, which is up slightly. TLT bonds, I've been looking at them as being very weak. However, they are having a pretty good day, and it does look like they might be forming an intraday flag. So we could see some more upside there, but looks like it might be bouncing off some support. USO is down on the day, but it is starting to hook back up. We may see it take back some of those losses that it had earlier this morning. And that's all I have for the final market update. Tom, I'm going to pass back to you. What did you see lately in the charts?
Yeah, well, we talked earlier, and we've talked so much today about technology, but consumer discretionary also was pretty weak this morning. It's bounced off the lows, but one group in particular, gambling stocks, have been under a lot of selling pressure that dates back really over the last 3 months. Starting in June, you can see this big move to the downside. But the last 2 days, and volume picked up yesterday. Be interesting to see where it comes in today. But there was a support area at dating back to the October low from last year, and if you connect that with the low that we saw in mid-August, that was pretty big support. We bounced off of it, went to the 20-day moving average, and this was one of those examples where you can see the PPO is accelerating to the downside. And so when price action's moving down and PPO is accelerating, normally what you do is you bounce and you hit the 20-day, and that's exactly what we did here with gambling stocks before we turn lower. Now, we do currently have a slight positive divergence. I would be watching the gambling stocks for a reversing candle. If you see one, then it might be time to maybe move into an individual stock within the group. I'd pull up the gambling industry like we do through the sector summary, going into the industry groups. You click on the industry group and it brings up all the stocks, sort it by scooter, and look for some of the better performing stocks within gambling, that gambling industry. And if you get a reversal, money could start coming back into gambling stocks, and you might be able to find a winner that way. But I like to try and take advantage sometimes of these groups moving lower. I don't like to catch a falling knife, though, so I'd have to see at least a reversing candle with a positive divergence in play. So why don't we move on? I know next up is the drilling down. So, Erin, if you're ready.
Yes. This one was kind of interesting as I was preparing today. Let's go ahead and get over to here. All right. So what I decided to do, since drilling down is usually, you get a sector or an area of the market and industry and then kind of work your way down to find some good stocks. I decided to start today with my with the sector candle glance. I did add in XLRE. Well, I had it on another one. But anyway, I was looking at just the sector candle glances like I would a group of stocks. Which ones look interesting to me, which ones look like they might have some potential. And the two that popped out were staples and utilities. I'm not a huge fan of staples even right now. I think they'll get some love. And they are starting to get some love, which is why their PMO is starting to turn up. But I was more interested in utilities. John Murphy wrote about them this morning, I believe, or last night. And I'm seeing that PMO starting to turn up. So I decided that I would concentrate today on the utility sector. So I wanted to, before I did that, since I was sort of torn between XLP, the consumer staples, and XLU, utilities, I decided to throw it on a relative rotation graph and just see in the shorter term what the sectors are doing, what looks interesting. And sure enough, XLU is the only one sort of moving in that northeast direction. So to me, it sort of confirmed that would have, of the two of them, would be the one I'd be a little bit more interested in. XLRE looked interesting as well, but I decided to concentrate on utilities. So then I went over to the, let me go back over here. I then went back to the sector summary. There's all different ways you can drill down, guys. This was my choice. So utilities is leading right now intraday, which also is giving me a little confirmation in the short term. And then I looked at which ones are currently leading, and that of the industries, and that was gas distribution and conventional electricity. So I went to my technical scan workbench and I added those two groups. And the way you do that is very simply going down here and picking what you want. You can drill it down to the industries, which is what I did. So I went all the way down here to the bottom to utilities, and I just added gas distribution and conventional electricity. So for example, if I wanted to add that, I just put that and it comes in down here. And that's pretty much how you can do that easily. So I have a focus PMO scan. Mainly it's my PMO scan that I run all the time. But when I ran it, I wasn't getting that many hits. So I decided to loosen up my PMO requirements to having it only rising as of today and not having had a buy signal yet. But I did leave in my trend model setup so that at least I knew I was going to get into something that has, in the intermediate to long term, been strong, because the 20 is above the 50-day EMA, which is above the 200-day EMA. So I ran that scan, and I got 20 results, and I actually haven't completely looked at them because they keep changing as I've been going through the day. So I'm going to put those in here and we'll look at a few of them. All right. So there's certainly a bunch of different ways you could arrange this. Right now it's arranged just alphabetically. I'm going to go ahead and just take a peek at scooter values just to see what might be interesting that way. I like to pick something sort of in the middle. So there's a few in here that might be interesting. But, let's just go to the candle glance. Like I just did with the sectors, let me just go to my candle glance and see if anything just looks interesting right out of the gate. Boy, actually, I see a lot of rather interesting setups here. Dominion Energy, I think, looks great. Let's add that to one that we'll look at. And here is why. I like it. Okay. We've got a breakout from this trading channel that we've been in since, that really started back here at the end of July. Very much like that. We've got a very nice PMO setup here. It's getting ready for a positive crossover. It is turning up above the 0 line. We had a bit of a fake out here. You could see similar action here of the PMO turning back up, but it's been in that trading range. And so it drifted lower, but it wasn't that painful, at this point. You've got a reverse divergence. You've got price bottoms rising and PMO bottoms declining, and that would be a reverse divergence, which is actually a positive thing. If you think about it, it's been able to get the PMO out of overbought simply by drifting mostly sideways, and that's a positive. So that breakout, I think that looks pretty good. Where's the next area of overhead resistance? Let's check it out. I could see back here as a possibility near these tops. But more than likely, I suspect we're going to get up here and look at that gap. I'm looking at this right now as well, and I think you could make a case for a head and shoulders, maybe a very large one. I think Dominion Energy looks really interesting right now. All right, so let's go back to our candle glance that we were looking at earlier and see what else looks interesting. Alete, I looked at this. That was the first one, of course, alphabetically, but I liked this rounded bottom that's coming in. You can see that the PMO is rather flat. It's still rising somewhat, but I think there's some good upside potential here. You've got the 20 turning up above the 50-day EMA. Maybe you'd want to wait until you get a breakout above that 20-day EMA, but I think this one has some potential. Look at the scooter starting to improve. OBV is starting to improve with this move to the upside. So I think ALE looks rather interesting. And we'll go back one more time here to our candle glance. I'll pick out just one more. Oh my gosh, there's so many choices here. Okay, well, let's look at, I'm going to actually do this. I'm going to add an indicator. So I'm going to use a 6-month chart, and I'm going to add the PMO. And then I can sort it by descending. So which ones have the strongest looking PMO values? Okay, so those are really up there. They might be considered in the overbought territory. So let's go the other direction. All right, so these are lower PMOs, but they're on the move to the upside. So we didn't get the breakout here on SJI, so I would leave that one alone. Let's see, that looks interesting. Well, that's the other Dominion Energy version. So that's a pretty nice breakout, but happened pretty quickly here. Okay, this is the breakout. That's, again, see, Dominion Energy catching my eye. Let's see. This could be interesting. Yeah, those were the main ones. See, I keep going back to that one. Let's try the New Jersey NJR, because it is getting ready to break out here. We do have the PMO turning up nicely. We did have a fake out on this last time, though. We have a 520-day EMA positive crossover. I honestly, when I look at NJR, not liking this that much. It just caught my eye. I think of all of these, I would be looking at Dominion Energy. I think that one looked the very best. So I'll pass it back to you, Tom. What do you have as far as drilling down? Where did you go with this?
All right. Well, I started with technology just because that's been the topic of the last couple of days. So I thought maybe I'd look at a key group there. So what I'm going to do is just kind of walk everyone through, taking a look first at the sector and industry group summary. Let's start with the sector and just show you how we can kind of go through here. Technology, again, near the low of the day, down almost 1%. So if you click on technology, then you can see going down here the list of which groups are lagging in the technology space. Now let's take a look at the last week. Really, it's last 2 days, but if we look at the last week, look at internet. Internet down 7% in the last week. The nearest industry group within technology is software, which is down roughly 2.5%. So there's no doubt internet has been the weak part of technology. So I thought I'd focus there. And I don't normally like to try to trade stocks within a space that is weakening. And I do think internet could go lower. But if I was going to trade it, I would go with stocks that are outperforming. So I wanted to go over how I look at that. So let's pull up the internet group, and these are all the stocks within the space. I'm going to just quickly sort by scooter because this, I wouldn't necessarily rank these as the order that I would buy them, but I'm going to focus on the ones that are, 80s and 90s in terms of scooter, and I'm going to avoid the ones that are way down here at the bottom. And take a look at some of these, NetEase, Snap, Facebook, Twitter. These are all stocks that have essentially single-digit scooters, meaning that they are not performing well relative to their peers. So let's pull up a few of these. Let's start with Snap. And I think when you look at the charts, I think it'll be pretty easy to understand why you don't want to be involved. I'm going to pull up the relative chart. I'm going to go over these one at a time, but here's Snap. So yes, the internet stocks here you can see over the last 6 weeks or so have been very weak, but we are still well above the earlier the earlier low that we saw in the internet, which was back in the March timeframe, just below 1,500. But look at where Snap is. Snap's breaking down. So what does that mean? Well, it means that you got one of the worst performers in the internet space. So I don't want to be involved in Snap. If I'm going to be involved in an internet stock, it will not be Snap. I don't want the stocks that are underperforming. I want stocks that are outperforming so that when money starts to rotate back into this group, I'll have some of the leaders. So Snap is one you want to avoid. Let's take a look at Facebook. Same thing. Wasn't that long ago, by the way, Facebook looked pretty good on a absolute basis, all-time high, and then they delivered that debacle of an earnings report in July. I did not think that this support level was going to hold. I am looking for Facebook to make a run down to 150. Maybe this gap support holds temporarily. So far, we're seeing a little bit of a bounce there, but I think Facebook goes to 150. And if it breaks below 150, it is not going to be good news. That would be intermediate term support being lost, and that would mean Facebook's probably going to be under pressure for a while. But look at the relative strength of Facebook versus internet stocks. Another one down near its relative low. Not something I'm interested in. All right, let's take a look at Twitter. So Twitter breaking down today below its earnings low. Not good news. We'll see if it can hold, but at least temporarily on an intraday basis, looks like it's breaking down. And another one that topped on a relative basis a few months ago and has been working its way lower. Not one of the better performers out there. So these are examples of stocks I would not be interested in the internet space. But let's take a look at some that are very interesting. Yext. I couldn't even tell you what this company does other than I assume it's related to the internet since it's in this group. But take a look at its price chart over the last 3 or 4 months. Moving higher. It's been holding its rising 20-day moving average. It's trading almost right there. You could keep a fairly tight stop. And if you look at the relative strength, I don't think there's any question that you've got one of the leaders here. Moving on, IAC, Interactive Corp. Breakout, very heavy volume. This was earnings related. Here was the reaction low down here on 185. I think if we could get this down to that 185 level, it'd be interesting. Again, you've got a stock, excuse me, it's on a relative basis breaking out. Let me just take 1 second. Okay, let's try this again. So Interactive Corp, I think, looks pretty good. Let's pull up the next one, CRAB. This is Carbonite. Just recently broke out after a couple months of consolidation. Once again, looking at the relative strength versus internet, you got one of the leaders. GDDY, I've just got two more here. GoDaddy, another stock that recently broke out, it's coming back down, testing its 20-day moving average, and once again, a relative leader. And then last up is Boingo Wireless, WIFI. Huge move up with earnings. Look at that volume. Pulled back temporarily, but I see the stock continuing to rise. I love the test of the 20-day moving average. I believe Wi-Fi, WIFI, continues to move higher, and the relative strength has been astounding since that earnings report came out. So this is certainly one to keep in mind. So those are the stocks that I had for drilling down. Erin went through several stocks as well using the RRG and going into the utilities. So we took a look at it from an area of the market that's a little stronger and an area of the market that's been weaker, trying to zero in on potential trade candidates. So I hope you enjoyed that.
Yes. I did. Somebody did ask if I would post my scan to the recap, which I shall do. Just remember that I do use those hash marks or those slash marks to comment out certain things that I don't want to include. So just realize when I print it that some of those hash marks are in there, and you can just erase them if you want to include those different parameters. So.
Okay, and if we could get the poll up here, we'll take a look at what's going on. And there you can see everyone's current investing preference. Almost a couple hundred people responded here, and we've got stocks. 66% of you invest in stocks. That's not surprising since you're watching Market Watchers Live, and that's what we tend to talk about. What areas? I know you do a little bit more diversified investing and longer term. What categories do you fit into there, Erin?
I went ahead and filled. When I took the survey, I said stocks, ETFs, and mutual funds. I typically am in a lot of mutual funds, ETFs, to spread my risk out with a lot of my longer term monies in those longer term accounts. My shorter term accounts to intermediate term, pretty much all stocks. Maybe I'll put an ETF in there once in a while if I'm interested in what's going on with it. But typically, that's what I do. And we're saying current investing preference. So honestly, right now I'm not really getting that involved in the market, but when I am in stocks because I'm looking at them in a little bit more shorter term since the market is a little bit volatile.
Mm-hmm. Well, I filled it out and I selected stocks and other.
What's your other?
Cash.
Oh, okay. All right. Yeah. All right.
I deliberately didn't put cash in there because I think that's a choice. I think that is an investment.
It absolutely is.
Especially as a short-term trader. There are times when I definitely want to be involved, at least have some cash available. And knowing that September is a weak month, historically, this is not a bad time to have a little bit more cash. And looking at what technology's been doing, it certainly underscores that fact, that idea.
Indeed. Okay. All right. Well, there's the upcoming schedule for you. I'm going to sign off and say goodbye. It's been great, Tom. I'll see you in the morning tomorrow.
As always. And it was great having Bruce on with us today. It's always good to hear from Bruce and get a little Y coffee and exposure. And, talking about the hypodermics, very interesting discussion. And we'll have Bruce back on not that far in the future. I want to thank everybody for being with us. Please do remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. Enjoy that football game tonight to kick off the season. See you back here tomorrow. Happy trading.